Welcome to today's class. So, how was your weekend? I hope you all had a great weekend. Our last session was on Wednesday. I took a break from both trading and anything relating to mentorships and stuff like that since Wednesday. But it's good to be back now. It's good to be back now. So, last time we talked about market structure, market trends, higher highs and higher lows, blah, blah, blah. So, today we'll be going deeper into market trends. All right. We'll be going deeper into market trends. Mind you, these are just concepts, but they are powerful concepts that you can actually use. So last time I mentioned, let's start. Last time I mentioned that we have three market trends, right? The uptrend, which is made up of uh series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? And then I also, excuse me, I also talked about the downtrend. That's the bearish trend, which is made up of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Right? Good. Then I also made mention of the sideways trend, which is basically price consolidating between 2 points. Between two price, it could be between 50,000 to 60,000, bouncing around an area of support and resistance. So this particular one, I told you guys, if you don't know how to scalp, I'll advise you not to do it, not to engage the market here. Only engage market that has a clear direction. It's either going up this or coming down like this. All right, good. So today we are going to be talking about trend lines. What are trend lines? Now, trend line is a powerful tool we use in measuring a trend. Someone will now be like, which one is measuring a trend again? So someone will now be like, which one is measuring a trend again? It's simple. When we say we use something to measure something, it's like saying, let's say you want to buy a cup of rice now. Yeah, they are going to bring a cup. All right. When you bring that cup, they are going to fill it up with rice. That is measuring that cup of rice. When that cup is filled up, you are not going to see anybody pouring more rice inside that already full cup, right? Because what? It is filled up. You have to empty it and start again to measure another one. Same thing with trend lines. And the beautiful thing about a trend line is that you do not need a special indicator or some kind of page tools to understand or to be able to draw a particular trend line. You can identify a trend with your clear eyes and measure that trend with your clear eyes. Now, there are two things, or more than two things actually, but there are some things that a trend line helps you do. Number one, it helps you measure a trend. Measure what? The trend. Number two, it helps you know when a trend is about to come to an end. Helps you do what? Know when a trend is about to come to an end. Also, a trend line helps you understand at which points you can engage the market, in the sense that if price is about to violate a particular trend line, you are going to know when to engage the market to either buy or sell. This is for those who will be trading what trendline breakouts and retests. So you heard me right. Trendline breakout and retest, just like the support and resistance that I taught you guys. That I told you guys that when we have an area of resistance here and we have an area of support here, and we now see price trading between them. If it gets to this support, it bounce, gets to this resistance, bounce, support, bounce, and all that. We wait for what? For price to trade above either this resistance or below the support. If it trades above this resistance and close with a full body candle, we want to wait for price to retest that resistance, because now the resistance has automatically flipped to support. So this previous resistance that is now support, what is the job of a support level? The job of the support level is to do what? Stop price from falling, right? And practically price will likely do what? Bounce from there. So when price breaks out of a resistance like this resistance automatically turns to support, and we expect price to retest it and bounce from there. Who is that? Please mute your mic. So that is what a breakout and retest looks like. Breakout of a particular level, then retest. All right, this is just support and resistance. Now, trend lines. How do we measure the trend using a trend line? I know some of you that have been following me would have watched this video on my YouTube channel, but here is it. How do we measure a trend using the trend line? When you see an uptrend like this, the first thing you want to do is mark out first break of structure, second break of structure. When you notice, because I already told you guys during the last class that when you see two break of structure, that is the beginning of a trend. So practically when price is coming from a downtrend, then price takes out the previous high, this becomes a change of character, right? Then for us to now know that price is about to change from this downtrend, for us to now know that price is about to change from this downtrend to an uptrend, we need what? We need a break of structure. So when we see a break of structure, that's two. Change of character, break of structure. When we see something like this, a trend has automatically begun. All right. Now you will now take this particular line, this one here, trend line, and mark out the first two lows. You mark out what? The first two lows. Same thing in a downtrend. We are currently in an uptrend like this. So I don't know who is that though, but mute your mic, please. Mute the mic. So if we're on an uptrend like this, you see this change of character here. Then we have this break of structure. A trend has begun. What do? You mark out the first 2 points, connect the two only together first. All right. Now in this case, all these levels has not played out before. You connect this first two, connect this first two. That is your trend line. Now watch price automatically gets to this trend line and bounce. It now acts as this line below now acts as a support, stopping price from doing what? Going lower. So anytime price should come back here, you will see price test on it and bounce back. Anytime then break structure to the upside or not, whatever. But when you have your trend line in place like this, whenever price is coming back, even if price does something like this in the future, doesn't come back here, or does something like this, just started going up, ignoring this trend line. On no account should you now bend your trend line like this to go and suit it. No. When you've connected these first two dots, That is how it should be. Why is this so? It's simple. These first two dots now is the beginning of the trend, and this is the area that you are going to use to measure the end of the trend. So price could actually be doing all this within the trend without touching the trend. Then suddenly in the future, you are going to still see price come back here and touch the trend. Something like this. You still see price come back here, touch the trend, and still go up. Now, in a situation where you've used because wanted to you wanted to force the line to touch everything like this, you now went ahead to touch it. Yeah, you are not going to know when the trend has ended. The whole purpose of this line has been invalidated because this line is supposed to measure the trend, and you bending it like this, you're not getting it right. The first thing you want to do is connect the first two dots and let it be like this. Even if the third one does not touch the line, even if the third one is like this, don't come and bend this. No, don't do that. Just leave it this way. This is how it should be. Now, you will now ask a question. Why do we have to leave it this way? It's simple. Whenever price comes back to bounce on that line, it's going to do what? React from it. Yeah? Now, in a situation where price, let me remove this. Now, in a situation where price comes back to bounce on this line and trades below it. Now, the candlestick that went below this line closed with a full body candle. I don't need to explain what a full body candle is. I thought you guys candlestick. Not the wick. A full body candle trades below this trend line. That is what we call a trend line breakout. That is what we call what? That is what we call a trend line breakout. And here is the rule. Every time price break out of a trend line, automatically that trend is about to end. Doesn't even really matter sometimes if there is no change of, if there's a change of character here or not. But when you see price trade below that trend line, expect price to do what? To retest. And before price retest, immediately you see this breakouts, you take your short position too. This is if it is in an uptrend. You're seeing the price breakout with a full body candle. Like I said, with a full body candle. Take your short position to exactly that place price broke out from here. Exactly that place price broke out from, that point. That is where you are going to put your entry. This point here. Not here. Don't be like, hey, price has broken out. Let me run and join the breakout. You will get bonds. No. Once you see the breakout, that is not the time for you to take the trade. It is the time for you to watch price. That exact place where price broke out from, that is where you enter. That is where you put your entry. Yeah. Then now there are multiple lows within this trend. All those higher lows, higher lows, higher lows. You can either target this one as a take profits, or you target this one as a take profits. Right? The first thing you should understand is that when there's a trend line breakout, price will likely clear out all these lows down to the beginning of that trend. That is this one, down to the beginning, this one, or practically the second one, the breakout structure. So you can either target these lows or you target this other low. Or if there is more lows within it, you can just keep targeting any of those lows. All right. Now your stop loss is going to be above the eye that led to that breakout. That is where your stop loss is going to be. So you place your stop loss just above the eye, then you target either this low, or you target this point here. You target this last low here. You are not yet into the trade. This is just you anticipating. You've placed your destiny now. Then all you have to do is, if it's Bitcoin or crypto you are trading, you go to your Bybit app, right? You go to your Bybit app. This figure, this is your entry, right? You go and set limit order, entry. This is your stop loss, this figure, stop loss. This is your take profits. You go there and set it on limit order, no market order. So what are we expecting? We are expecting price to now do what? When there's a breakout, expect a retest. Price will likely retest. Then when price retests that trend line, before it will now start doing what? Before it will start going down. Right? This is just the basic trend line breakout and retest. And this is how you trade basic trend line breakout and retest. But guess what? This is just the basic. There is more to it. Now listen. When there is a breakout, automatically every single person anticipating for price to bounce from this level and go up are already in loss. This is why the retest happen, including big banks, including what big banks, hedge fund that wanted to um get into this trade at this level of trend on different charts, on different kind of strategies. It represents an entirely different levels. All right, which kind of like make it very very easy to understand that a lot of people will be waiting for price at this level, this trend line bounce. Why? Price came to this level, it bounced back. Came to this level, it bounced back. So everybody, we are repeating what works. That is just it. Trading is all about repeating something that you have seen before happen, and this is going to happen again. It's just like fighting. Somebody blew you, you bent down, the blow did not touch you. Next time when you want to fight another person, the person blow you, you will bend down again so that the blow will not touch you. So the same thing applies to this place. When you see that this thing comes back here, it pushed back, it comes down to the trend line again, touch it and push back. Automatically, everybody will be expecting it to do what? Bounce here, right? Good. Now, let me now break it down to you. Whenever price is approaching a trend line like this, your mind should not be at a trend line breakout and retest. Your mind should be at what? That price should touch this trend line and bounce. That is going to be the first thing on your mind. If you don't know, you know it now. The first thing on your mind should be that when price gets to the trend line, it does what? It bounces. Why? There is a simple rule in trading. Follow the trend. The trend is your friend. Yes. So when price gets to this point, you are expecting price to bounce from this level. But you are not going to expect price to bounce from this level blindly. When you see price approach this level, you need what? A confirmation. And what kind of confirmation are we looking at? We are looking at a candlestick confirmation here. What kind of candlestick confirmation? Bullish reversal candlestick, because this move from this point to this point is a bearish one. So we are looking at what? A bullish reversal. It could be a morning star, it could be an armor, it could be a bullish engulfing candlestick, it could be an inverted armor too. All right, but it has to be what? A bullish engulfing candlestick. When you see that move, when you see the bullish engulfing candlestick form, next candle open, you enter your trade, set your stop loss below what? The trend line. Why is setting your stop loss below the trend line? Because we do not expect price to go below that trend line. Anything that's going to make price go below that trend line, it's risking what? The end of the entire trend. It's risking what? The end of the entire trend. So we don't expect price to go below that trend line. That is why we are going to do what? That is why we are going to place our stop loss below this trend line like this. Then we'll put our take profits. We are targeting the next high. When are we doing this? After price has given us what? A bullish reversal candlestick. Without that candlestick confirmation, don't engage. Don't risk your money on something you are not certain of. Price might not even show that candlestick confirmation and boom, buys. Don't regret it. It is part of trading. That is why as a trader, you have to focus on only high probability what? Setups. So only setups that meet your criteria is what you should follow. It doesn't matter if one trade did not meet your criteria but later went your way. No problem. Don't sweat it. There are thousands and millions of opportunities to make money from this market. So that particular one you missed is not going to kill you. You wait for the next one. When you see that bullish reversal candlestick from this point, you do what? You engage and buy. In this case, you'll be targeting the next high. Price now could now do what? Price now can now do what? Give you small profits and break out. Accept the loss. It is part of trading. But you see this particular concepts that I'm just showing you now. If you see it 10 times on the chart, at least 7 or 8 of it is going to give you good profits. Before you say this thing, go to your chart by yourself. Go to previous price action. Back test it by yourself. You will be surprised at how productive and how accurate ordinary trend line bounce with candlestick confirmation will give you. It's not, I'm not telling you to go and look into the future. Just take one pair, either BTC or gold. Gold has been an uptrend for a very long time, right? Just take gold, go and backtest it. Just do only trend lines. You can do 15 minutes time frame. You can do 1 hour time frame. Just go and be checking it to see. You are going to see how much opportunities, money making opportunities that price has presented using just what? Trend line, candlestick confirmation, and boom. Now, this is what you should have in mind anytime you see what? Anytime you see a trend line. Once you see the trend line, you connect the first two dots, you wait for price to approach that trend line. Then you are looking for what? Either buys. If it is in a downtrend, connect the first two dots, this and this. You wait for price to do what? To approach the trend line, and you do what? You sell. You follow the trend. Right? Good. That is what it is. That is what it should be. Then in a situation where price decides to break out of the trend line. Now, this is when the bounce did not work out and price decided to break out of the trend line. Here you have a strategy that works out 80 to 85% of the time. This strategy gives you more, can actually make you a lot of money with less complications. It is very, very simple, very, very simple, right? With less complications. Now, in a situation where price decided to break out of this trend line with a full body candle like this, that is now when you are now going to do what? Change your bias from bullish to bearish. If it's in a downtrend, from bearish to bullish. So in this case, you put your entry exactly where price broke out from, your stop loss just above the eye that led to that breakout. Your take profits, your targets either this low or this next low. Just target any lows within them. You can even decide to target the entire low. Most times I target the entire low depending on the market structure. I target the entire low. Okay. So when this happens, next thing you want to see is what? You want to see price retest that particular trend line. Now, I told you guys, just when you put this, you go to your exchange and you do what? Put entry, put stop loss, put take profits, right? Yeah, that's the basic way. But the way I want you to actually treat trend line breakout and retest is different. When you place this like this, you've gotten your entry, you've gotten your stop loss, you've gotten your take profits, but do not place it on your exchange. Don't enter. Just place it like that and wait for price. What are you doing? You're waiting for price to come back here to retest that trend line. You've not entered this trade. You are waiting for price to do a come back and retest that trend line, because even though this works 80 to 85% of the time, sometimes it will just come back and start going up. And then maybe when you now check your mistake, you will now see that I did not draw this trend line well. This particular bounce was actually from the trend line itself. I bent the trend line somehow. So sometimes to avoid stories and situations like that, you use confirmation entry. Now, what is trendline confirmation entry? Trendline breakout and retest confirmation entry. It's still candlesticks. You see how important candlestick is. I'll keep talking about candlestick. Even when we start talking about liquidity trading concept, you will still hear me talk about candlestick, candlestick, candlestick. So go back to those candlestick videos and rewatch all of them. Read that PDF, because you need candlestick in anything you are trading, as long as it involves technical analysis. So when price comes back to this trend line, what do you want to do? You are waiting for what? A bearish reversal candlestick. Why? This move from here to here is a bullish one. Price can continue going up. You don't own the market. You cannot control the market. Right? So when price gets to this trend line, you want to see what a bearish reversal candlestick is. It could be an angry man. It could be an evening star. It could be what's it called? A bearish engulfing candle. Just any bearish reversal candlestick. When it appears and forms, then close. The next candlestick to it, that is where you enter. All right. Your stop loss is still going to be above that eye that led to the breakouts. And that is where you enter, and will not likely see price start going down. That's the basic way of trading trendline breakout and retest. Nothing more. Now, you might now ask, is there any way to confirm that price is definitely going to break out? Now, you might now ask, is there any way to confirm that price is likely going to break out from a particular trend line? Well, that brings us towards the fifth rule. This particular concept, I taught it to my friends, I think around 2022, and I'm glad that a lot of people have also incorporated it in their mentorship and everybody knows what it is now. But the more everybody trade the particular concept, the less it becomes more effective because the market will not be too predictive and it will start doing what? To start doing something else. But regardless, the fifth rule. What is the fifth rule? The fifth rule states that any trend line, either bullish or bearish, that gets at least 4 touches, the fifth touch is definitely going to break out. This happens, this has a very, very high probability of breaking out when there is a fifth touch on that particular trend line. What does this mean? Let me clear this. What does this mean? This means that when we have a trend line like this, we have first break of structure, second break of structure. The trend has started, right? The trend has started. Now, this particular trend line now gives us 2, 3, 4. Then you draw your trend line like this, and you are seeing first test, second test, third test, fourth test. It did not break out. Now, this does not mean that this third test price cannot break out and retest. So it is still possible that price can just, on the third test like this, price will just break out like this, retest, and start doing what? And start selling. It is very, very possible. But in a situation where price does not break out from the third one, in a situation where price does not break out from the third one, does not break out from sorry, from this second one, this third one, or even this fourth one here. A situation where price does not break out from this one. The fifth rule now states that when you have 4 touches like this, price will like it's just like excuse me. So why is this? It's just like, what should I use? It's just like you are cutting down a tree, right? You're cutting down a tree with an axe. Okay, as I was saying, it's just like you are cutting down a tree with an axe on a particular spot. The more you cut from a particular on a particular spot, the more weak that particular spot becomes, and eventually that tree is going to fall. So the more touches on a trend line, the more touches on a trend line like this, the more um weak this particular trend line gets. So the more price keeps touching on it and testing it, the weaker it becomes. So the fifth rule now says that when price has touched it like 1, 2, 3, 4, the fifth one is likely going to break it. But don't anticipate price to just break it on the fifth one. Yeah, it's a very, very high probability theory which has been proven with research, not just research, with studies to actually be valid and use it a lot. On the fifth touch, you will likely see price breakouts. This happens 80 to 90% of the time. So in that case, you are going to see what? You are going to see price breakout, retest, and do what? And sell. Same thing here. In a downtrend, you see 1, 2, 3, 4, right? You still likely do what? This is like 4 touches, right? That is 1, 2, 3. Let's see. We get the fourth one here. When the trend line has four touches like this without a breakout, the fifth one will likely do what? Breakout, retest, and move. So that is just um, the logic behind the fifth rule. All right. Why is the fifth rule going to break it out? The trend line has been tested multiple times. It's becoming weak. What is making it weak? There are lesser orders on the trend line. So it's becoming weak, and price is just going to do what? Break out of it and retest. This is an high probability setup as well. It's not an 100% something, but it is an high probability setup. So let's go into the charts and see how we can draw trends or trend lines on a real chart. Okay. So, excuse me. Okay, so let's draw a trend and see. So after this consolidation, we have this low and this second break. So we start from here. Let's see. So we have this area of consolidation here. Then price broke out of this consolidation. We tested at this point. You can see the retest here. Then broke out. So we have the first break, the second break, and move. So let's see. One, two, three, four. Okay, this one broke out on the fourth touch. This one broke out on the fourth touch. But as you can see here, this is good live charts. You can see good retesting. Yeah. Although looking at this particular chart, I've not seen a very clear bearish reversal candlestick. This this shooting star is not shooting very well for me. This shooting star is not shooting very well for me. The body is actually bigger. So I'm still looking for what? A candlestick confirmation to take this trade. And where will I be taking it to? So if I was to trade this particular one live, this is the high that led to that break of structure, this one. And I can target any of all these lows here. I can just target this particular low here. 2007 something. And boom. Likely see price do what? Move this. Just likely see price do what? This is the breakouts. Sure. I'll likely see price do what? Come down. All right. So this is one way to trade it if you want to go aggressive. But I told you guys we should be looking at a very nice bearish reversal candlestick around this point before we can sell. Okay, that is one. Okay, let me even risk like $500 on this and go aggressive first. There is no harm in doing what? Testing out something. All right. Let's see. Where's that my accounts? A moment, please. XVU USD. Okay. So now, as I was saying, with a very nice bearish candlestick confirmation around this point, you can do what? You can short this particular trade. All right. So, but this is not what we should be looking at. We should be looking at where it has played out before and how it's played out. So let me look for more examples. Let's see for more examples and how price broke out and retested. That is what we should be looking at now. So this is the 4 hours time frame. Let's go down to like the 15 minutes time frame. This trendline breakout and retest thing actually works on all time frames. Doesn't really matter if it is a 5 minutes time frame or this. Okay, I think this is another one. Let me use another good so I don't remove that chart. Look at this. Here's another one. Connect it. 1, 2. And what do you see here? Connecting these first two dots. Sorry, hang on. Connecting the first two dots like this first one and this second one. Let me zoom it. As this is the first one that broke here, and we have the second one. Now, mind you, yeah, when you are doing trend line breakouts and retests, if you are marking out your trend lines, it's very, very advisable you place your trend lines on the week of the candlesticks. Yeah. Why is that? Because you confirm the breakouts with a full body candle, which means for us to be saying we are confirming breakout with a full body candle, it is possible that price is definitely going to do what? Price can also trade below or above a trend line and still closes below, which means price can actually go above a trend line and leave a wick. I don't know if you understand. Price can actually go above a trend line like this and leave this wick here. Then you now think that what maybe when you saw price above it, you think that there's a breakout, then you later close below and still start selling or buying depending on the trend. So this is why it is very, very important you put it on top of that wick. Because when these wicks go above the trend line, it can hit your stop loss and they will stop you out. Wicks, yes, wick will stop you out of a trade. It's better to use what? It's better to use the full body candle. So when you are trading your trend, when you are drawing your trend lines, make sure you are drawing it on top of the wicks like this. So you have the first touch and you have the second touch. That is what you should be looking at. And like I said, when you see structures like this inside your trend line, don't come and be bending your trend line here because you want it to touch it. Don't come and be bending your trend line like this because you want it to do what? You want it to touch it. You wait, you draw it this way, even if it doesn't touch it, the trend can keep going on. All right. Now we have a full body candle breakout here. If I was to take this trade for my long position, that place it broke out from, the low that sponsored this breakout was this low. This was the low that sponsored this breakout. For my stop loss just below this low here, and I can target this high or I target this high. All right. So let's see the first high. Price is currently there. I think price has already taken out that first high already. So price has taken this first high on this particular high right here. So why won't you take the beginning of the trend? It is simple. Before that breakout, there will likely always be what? A consolidation. Now, this consolidation acts as support or resistance levels. Those are areas where price might likely want to reverse from, which is why you don't actually target the beginning of the trend unless it is internal structure. It is part of what we'll be doing during the next class tomorrow. Primary and secondary trends. Okay, unless it is internal structure. So you set realistic targets. Don't just this trend line breakout and retest. You now carry your targets to heaven. No, set realistic targets, manage your risks, and you move. So you target this structure or you target this structure because every single structure found within the trend, price is going to take them out. Like all these small structures found inside the trend, price will likely take them out. So you see the simple breakout, you saw our price came back down to retest that line before moving back up. All right, good. Let's look for few more examples. Let me go to other pairs. Let's go to other pairs. Let's see if there is a trend line here. Let's connect and see. Is there a trend line here? Let's two dots. Let's see. And there's no trend line here. This is not an accurate trend. Okay, let's see this one. Oh, the pair is actually in a downtrend. So let's see. After the consolidation, we have one, and then we have this. So this is like the first, the second, connecting these together, and we have this little one here. So let's see how price broke out from this. Like I said, full body candle. Full body candle like this. Yeah, if I want a short, I'll take my entry here. No, this is long. This is my entry around that area where it's broke out from. There's also one thing again I'm going to advise you guys, and place it at the eye that sponsored that breakout. I can either target this low, or this low. I'm not going to be targeting a strong support level. I target this low. Now, when you understand primary and secondary structures, this is something that will be taught on our next class. When you understand primary and secondary structures, this is a 1 to 3 hour trade. You are now going to know if price is going to give us a new low or not. All right. Good. So let's continue. Now, in a situation where price breaks out like this, and it's taking time to retest. So most times you can see price do something like this. You can see price do something like this. So you can see price do something like it has broken out. For it to retest, you now start seeing it move this way. This was the area of breakout, right? But you now start seeing it move this way. All you have to do is practically wait for this price to actually level with this particular trend line here. I don't know if you're getting me. You wait for this price to actually level with this particular trend line and act as if and does what and act as a retest. Watch something like this, leveled with this particular trend line before you engage. This rarely happens anyway, but take note of this. If not, you might actually place your entry here and put your stop loss here, and price is going to go above it to go and retest this line because of this long consolidation here. Because of this long consolidation, price will actually hit your stop loss and you will not even know. So aside from price actually doing this, aside from price actually retesting your trend line, exactly that spot where it broke out from, which is supposed to happen in a situation where price just starts consolidating like this. Look, you watch this now. You saw the consolidation. It broke out. Instead of it to come back with it started consolidating, going upwards till it finally aligned with touching the particular trend line. That is where you now enter from. That is where you now enter from. Lastly, the last rule regarding a trend line breakout and retest trading is this. When price breaks out of this trend line and fails to retest and started going down, and you've seen price move over 50% of that trend line, it has moved over 50% of that trend line, cancel your order. The breakout has already fulfilled its objective, because the main objective of a trend line breakout is to actually take out these lows. So if price should take out these lows before coming back up to retest, it's coming for your stop loss actually. Like 80% of the time, it is coming for your stop loss. There is no need for you to actually enter the trade anymore. Once you see that price has already gone far, over 50% of the trend line, before it now starts coming up, you can cancel your order. You don't need it anymore, because we are trading with logic. There's a reason why price broke out here. The reason why price broke out here is to start taking out all these higher lows, higher lows, higher lows. So if price has taken out all the higher lows first before coming back, what is it retesting for? To retest and do what? Most times it's just going to take out your stop loss. So when you are in a situation like that, don't keep waiting for price to retest. Just cancel your order. Even if it retests and go your way, it is not. It should not even be part of your plan. When there's a breakout, expect price, even if it moves up to 40% of the trend line before coming back, no problem. But when you see below 50% of that trend line and it starts going down, just cancel your order. All right. So that's basically it. In our next class, we'll be talking about what's it called? We'll be talking about swing structures. Then we'll talk about primary and secondary trends. Okay, primary and secondary trends aligns with swing structures. We'll be talking about primary and secondary trends with swing structures together, and that will be tomorrow. So when we talk about that, we move to chart patterns, so we can see how we can start joining all these things together and start taking trades. After chart patterns, from chart pattern should be like on Friday, yeah. I'm not sure we can cover all patterns on Friday. We continue the remaining on Monday. But then after chart patterns, then we move to liquidity trading concepts. That is when some of you that want to actually be using this basic concept to make millions, you can do that. Because I know top guys actually use this. There's some of you that want to like push forward and learn the liquidity trading concept. You can continue. No knowledge is a waste, they say. All right. So I think from upper week, we start with liquidity trading concepts. So after this trend line, tomorrow we have swing structures and what's it called? Swing structures with I've even forgotten what I wanted to say. Then on Friday we have chart patterns, right? Monday we complete chart patterns. Then Wednesday we start with liquidity trading concepts, the strategy I use. And you are going to be funny that with all the liquidity I'm going to be mentioning, every one of them depends on either a particular or different type of candlesticks. So if you like, don't go and study candlesticks very well. You will still come back and study it on the advanced class. So I'll be seeing you guys tomorrow. When I'm done with the swing structures, then I will drop an assignment on both this trendline breakout and retest with swing structures. So that will be all for tonight. If you have any question, you drop it on the question group. I'll will be able to like reply some of you guys by tomorrow. Okay. Thank you. And stay blessed. See you guys tomorrow.